Hello, welcome to Chart Built Wealth, profitable investing with technical analysis. Well, it's Sunday, late afternoon, and I wanted to run through my current buy recommendations. So let's get into it. First on the S&P 500, I'm bearish. Went bearish back in January and have went bullish at the bottom and then got bearish too early, and here we are. Uh, what is relevant here is that we had a confluence of moving averages coming together above our price. And so in a type 1 convergence, prices would have sat here until the moving averages came down and tested the prices. Type 2 convergence is when prices come back to that convergence. And if they can't break through, then it quote promises a new lower low in this case because it's a bearish convergence. Well, prices were able to break above that last week and it went above my stop. But on my call late last week, I said I'm still maintaining my bearish outlook, and I'll show you why. We're going to go to the daily chart. Each one of these bars represents a week, and now we're going to look at a daily chart where each bar will represent a day. It's a shorter term time horizon. And so here we have it. And when prices got up here and jumped way up and broke through our weekly bearish rainbow convergence, it brought together all the moving averages on a daily chart. And so we had the flip side of that. Prices type 1 convergence would sit up here and kind of stop going up until the moving averages got there. And a type 2 convergence is where prices come back to that convergence. And if they're able to hold, then it suggests a new higher high. So we got that convergence. We've had a couple of days of slightly higher prices. So we'll see what kind of convergence we have here. So I don't want to really uh, jump out at a time when I feel like there's limited upside and there's potentially at least a test of this, which would be a pretty big down move. And if it can't hold, then it'd even be a bigger down move. So I don't want to jump out of this. So I'm long-winded way of saying I'm still bearish the S&P 500. Hershey, this was a recommendation just a few days ago, and it's not going my way. So I thought I would show this to you first. The bullish potential here is a nice big, first of all, consumer staple stocks. Um, because the market has been very, very volatile with a VIX that got up to 52, which is only exceeded in 2007 and 2000. So, uh, I think there's a lot of unknown things going on in the market when you see that kind of volatility. And so what I was suggesting is a consumer staple stock. We already have Exelon with utilities, which has done really well. But we had no consumer staple stocks. We don't have REITs. Those are other two defensive sectors. And so a lot of consumer staple stocks looked really interesting. Smuckers, the consumer staples ETF XLP, Hershey. I chose Hershey, and on Friday, Hershey was the only one that was down significantly, while all the other consumer stocks were up a lot. So I don't know if this is a company specific weakness or maybe a uh, one day incident. But the bullish part here is that you have a potential inverse head and shoulders pattern, left shoulder, head, right shoulder, neckline. It's like a man or woman hanging upside down. And within that, on our right shoulder, we have a potential inverse head and shoulders pattern. So I had my stop at 160. We closed at 158.50. If it would have closed at the low of the day, I probably would have stopped this out, but it was able to retrieve it, and we don't really have a decisive breakout at this point, and there wasn't really huge volume, which would show, really heavy selling. So I'm maintaining the buy rating, but I'm watching this very carefully. Point and figure, this is the negative. We had a bullish trend line, and now we have a bearish trend line, and we have a downward price projection based on this of 140. But if you look at this point and figure chart, we've had many changes of direction with almost like it's more of a consolidation where it's kind of chopping this way, sideways. So I'm reluctant to pound the table on Hershey at this point, but I'm maintaining my buy rating. EXCELON, this looks great. We have a 2.5 year descending triangle, a descending resistance line, a horizontal support line, 2.5 year pattern. Big patterns usually are more successful because the base is bigger. And so when we broke out based on measuring the base of this triangle and projecting that distance upward, you come out with a $51 price projection. We got to 48, so it's so this those price projections give you landing areas. So is this it? I don't know. So as I've been talking about, when you have big up weeks, you want to sell some, and when you get down weeks, you want to add incrementally to your position, even though you want to add less up here than you would have down here, because down near the breakout, your reward to risk is much greater. Whereas here, you still have upside, but it's not as compelling. So what we did have last week is what's called a bullish hammer, where prices opened at the gap down a little bit from the prior week's close and then sold off 5% intraday. And by the end of the week, we're right back up, showing that there were buyers coming in to buy, propping this up. So that's a good sign. And so it came right down to my stop and tested that, successfully held. So, maybe we get one more higher high here. So we have no negative divergence on a relative strength index at this point. Maybe we get a higher high and we get a lower high on our relative strength index, saying the underlying uh, oomph of the move had lessened from the previous one. So I hope that makes sense to you. But still bullish on Exelon. That was a good price action last week. China, still bullish on China. Um, had an inverse head and shoulders pattern, bullish inverse head and shoulders pattern, neckline, suggested 39. We pretty much got there, had a big correction. But as I've said on calls before, I've shown the Shanghai index long-term chart, and it suggests much higher prices. So still bullish China and also some Chinese stocks. Alibaba looks good right now. Um, so bullish on China. It still looks good. Antero Resources, it also looks good. Here we are, pretty much same 2.5 year consolidation in a symmetrical triangle, suggesting a $63 price projection, and we're at 40. So we had a little bit of a shooting star here, which is the reverse of a bullish hammer that we saw in Exelon. So maybe we get a little bit of weakness early in the week here, but I'd be buying that weakness. Fixed income, still bullish on fixed income, kind of a contrarian call. Everybody's saying rates are going higher, and I think they will eventually. But right now, still bullish on really 2-year to 10-year treasuries. I like higher quality bonds. I'm not into buying, especially in this environment, high yield bonds. I think your fixed income should be the backbone of your portfolio. It should be something that's consistent and solid, and you're not going to get any defaults or anything like that. Hopefully not treasuries. So here we had a bullish inverse head and shoulders pattern, breakout retest. Here's where we went bullish on January 27th. And this, if you measure from the bottom of the head to the neckline, you project that upward, you get 103. So we've had a little bit of a pullback. So I've been adding to treasuries I own IEF, the 7 to 10 year. I own IEI, the 5 year. I own SHY, the 2 year, and they give you a monthly coupon. Silver. So now I'm going to switch gears into some of the biggest potential upside charts that I see, and kind of once in a lifetime type things. I don't like to say that because it could be a once in a lifetime crash, but silver looks. I'm going to talk about silver, copper, and platinum, and the potential in those three look really, really big. So silver, we have a 15-year symmetrical triangle, A, B, C, D, E, got a breakout. So this pattern is intact, and it's suggesting, if you measure the base of this, $64, and we're currently at 30. Now, silver's super volatile, so this is an ETF. It has no leverage. It has no time component like a futures contract. So I like this, and I like owning SLV. Point and figure chart agrees with us. It's met its price projection, but if we got a breakout to 32, it would issue another price projection based on that breakout of this consolidation. We got a nice bullish trend line, so still bullish on silver. Copper, another gigantic pattern. These are monstrous. Again, what is that? A 16-year pattern, A, B, C, D, E. We've tried to break out twice unsuccessfully. I'm leaning towards the bullish side, even though that hasn't happened because we had a smaller, which wasn't a tiny pattern. This was a year and a half in the making, this symmetrical triangle. This is a ascending triangle with a flat top and a ascending support line, but this is symmetrical. This suggests 590. So if this gets us going to 590, $8 isn't too far away from there, and we're currently at 455. So recently went back to bullish on this, and I'll show you just the short-term chart, keeping a very tight leash on this. It looks like we've been consolidating here for 3 or 4 weeks, and I got my stop right there at 28. So the upside could be enormous, and if I have to take a loss, it's going to be a small loss, and I'm going to get out my tail between my legs and go crawl off into the corner. So that's copper. This is the ETF, CPER, trades on the New York Stock Exchange. And this is the point and figure chart. Bullish trend line, breakout. Now we're getting a consolidation and a pullback, and our price projection here is 49. So I think the potential here is really big. And platinum, last but not least, we've had a 1, 2, 3, 4 year consolidation here, and prices need to break out. They need to get going. They need to set the tone. But when I look at a daily chart of this, it looks pretty good. We have a small, this is what, a 1, 2, 3, 4, 5, about a 5 or 6 week pattern. So not as reliable as those 3 year patterns or the 15-year patterns, but this bullish inverse head and shoulders pattern, left shoulder, head, right shoulder, neckline. If we can break out of here cleanly, if we measure from the bottom of the head to the neckline and project that distance upward, we come up with 119, about 30% higher, and that would get us going in this direction, which could be even much higher. Point and figure chart is not broken out either yet, so um, so our stop is down here at 87. Uh, so again, the only reason why I have three commodity things, buy recommendations, is because again, I have not seen uh, commodity charts like this in a long, long time. Last but not least, for cash, I use T-bill, TBIL. It's an ETF. It gives you a monthly dividend. It's over 4%. I want to say it's like 4.10 on cash. So I have a fair amount in this. and it's a good place to park some money. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors. Have a great evening. Good trading to you tomorrow and the rest of the week, and I'll be in touch. Adios.